The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
Well, after several rally attempts today that have failed, and of course, what was even kind of an attempt to move the market up with Apple saying it was going to start buying shares back aggressively. That's rolled down $10 since that announcement. The only thing I can tell you is that there's a giant black hole that's probably going to suck everything into it via the close. I've sent out updates to get out of my positions before the weekend. Actually, I don't know, it'll be out in a few minutes for the subscribers. The market's broke. We should have been able to close back above 29.50 today. Now, maybe we get that come Monday, but I have a feeling that throughout the day, everybody was thinking that the Fed and the Treasury were going to come out circa October of 1998 with long-term capital management and calm the waters. Well, there's none of it. The Fed seems to have its thumb in some kind of place that you wouldn't like to know where it was, and little or nothing's being done. And of course, the question I have is now going into Friday, even if they start trying to aggressively go Sunday night, this is probably going to really thump the rest of the markets too. And you get this, at this level, you really get the possibility of seeing a lot of limit down action in the next few days. Now, I think eventually in 6 months, we're probably going to be back at 3,400 in the S&P cash. The problem is that we're probably going to have to go through a lot more pain than probably we need to go. But certainly, maybe the market will make a liar out of me. We'll close back up above 29.50. But you know what? There just isn't a lot to say that that's going to happen. More than likely, though, we're going to see kind of what we saw earlier in the day in gold and silver, which is just literally, if you can sell it, it is for sale. And, I had some really nice positions in the Tech Insider, and some of them, one was up 10% today. I hated to sell it. But when you get into markets at this point that start breaking all the technical rules, they can just get incredibly and even more incredibly worse. So at this point, all I was looking at this is a big pullback and an incredibly bullish market. It still may be, but at this point, you've got to really say that when literally the hysteria level is 11 on the virus, that what are you going to do? Now, the reason I think we're going to go probably back up to the top is at the present time, I'm looking at this as almost, I'm going to say the media has it at 11. That's a little Spinal Tap reference for those people that get it. But it's probably a 3. And there was a good interchange this morning I caught with some people interviewing Dr. Drew. And I want to play it now just so you get a little context of what everybody's yelling and screaming about.
Let me frame it this way. We have in the United States 24 million cases of flu-like illness, 180,000 hospitalizations, 16,000 dead from influenza. Why is that not being reported? Why isn't the message, get your flu shot? We have 0 deaths from coronavirus. We have almost no cases. It's coming here. That community transmitted case you reported on from UC Davis, that means that it's far milder than we know it is. And there are people walking around out there with the virus that don't even know they have it. It's so mild. So it's going to be much more widespread than we knew. It's going to be much milder than we knew. The 1.7% fatality rate is going to fall. Where was the press during the Mediterranean corona outbreak when the fatality rate was 41%? If they wanted to get crazed about something, why didn't they get crazed about MERS or SARS? This is an overblown, press-created hysteria. Now, the countries, China, United States, Europe, are responding appropriately and very diligently. We're going to contain this thing. We've already got a vaccine in study right now in human subjects. So this thing is well at hand.
And as Steve Rhodes says, no, let's not cloud the issue with facts. I'm just saying that eventually the facts will win out. At this present time, though, no facts allowed during a mass hysteria that we have now. And, of course, all that means is I'm probably going to get a better price on the stuff. But, man, I hate to sell winners. Especially a 10% winner in a day. Losers, I don't have real problems selling, other than the fact that all the wonderful support levels that should have held didn't. But my worry now is I thought we'd bounce today, and then China and everybody else would have at least a little bit of ability to measure everything out. But if the Fed doesn't get busy by the end of the day, then this probably goes into China on Monday morning. Even if they try to throw something at the market, still going to be problematic. Fund buying, we had what I thought might have been the Fed trying to run some buy programs earlier in the day, and you could just sit there and watch them roll through. If you had a heat view map, you could just watch it roll through the entire market. But, they did it 3-4 times, got it down to about minus 450, I think, on the Dow. And, of course, right back down to down 1,000 on. But the problem now that you've broken all the technical levels is that you get into a feedback loop of just running the table. And, again, why it's problematic for the moment, and I don't like taking losses and certainly not selling winners. There's always yet another trade. But we will wait for the next good technical setup. And like I said, man, it bugs me. It vexes me because some of these charts look as good as they could get. But at this point, if you can't get the market to bounce, you've got some bigger problems that you need to worry about, and that's not making money, but making sure you have any money when this is all over. As I was just starting to trade, in fact, we're running to the break here, but as I was starting to trade, there was a guy on that was a host occasionally for Tom, and I remember his story of being long like wheat or something, and he took like $50,000, went it and drove it to $1.5 million, and it went lock level down until he was broke. And that is the problem when you get into these markets that are broken. We'll be back in a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, got a couple of questions. Let's do history and then we'll get to those.
Then it's all just a little bit of history repeating.
On this day in 1953, Cambridge University scientists James D. Watson and Francis Crick, announced that they have determined the double helix structure of the DNA, the molecule containing human genes. Some discussion of whether or not there was a woman who basically was killing herself with radiation, died long before they got the Nobel Prize for figuring out what it looked like and how it worked. We knew a long time ago that it was what it was made of. We just didn't understand how it was put together. That was discovered back in 1869, so it had been around for a while. Some people got it actually wrong. Linus Pauling, one of the big men on the street for intellectual kinds of stuff, had the incorrect model at the beginning in 1953. Watson and Crick figured out what was wrong and got it done. But there was also this gal out there. I can't remember her name right now, but she was kind of the first to photograph it and confirm it. But like I said, you can only get a Nobel Prize if you're alive. They don't give it to dead folk. So, these guys get it, and somebody else kind of obscurely goes into the ether on this day in 1953. Okay, so what do we have? I want to take a look at some failed rallies. I thought that that there was the pop that would finally turn this around in Apple today. You can see the spike as it almost got up to 280. It's back down around 270. It came off of about 260 with an announcement that they were going to continue actively buy their shares. So that may keep this from going down too far, but the response should have been a great deal more than that. Especially since the factories are back up and running. But again, they were betting on China buying a lot of their products. And I don't think I always thought, well, every time we've heard it, it never really has worked out that way. China doesn't seem to buy a lot of things that are not from them. Other things of interest is a Cisco system. Of course, news on this one, it's got a little hammer out here, but got a lot of volume also. What was I was looking at? Had a bunch of energy sector Gartleys that look like they've broken. Let's go back and look at those real quick today, because I was going through those this morning, and we had kind of quite a lot of them. See what we have. This is Allison Transmission. It's down here kind of at the bottom of what would be a Gartley. But there were a couple of them in the energy sector today that looked interesting. I think it was this BlackRock Energy Resources, but it blew apart this morning and down past the bullish butterfly, and it reneged on that one. Let's see, CNQ, which is Canada National Resources, kind of like this sector too. When you look at the Gartleys, the energy on the way down, though, is problematic. This one's done a 135% retrace in that Gartley. And again, it was that bottom of that gap that looked good this morning, but the gap down is different. Okay, got a question. In the short covering on stocks like RCL, Trip, Devon, XCX, EOG, indicative that we're closer to a tradable bottom. I think we're closer to a tradable bottom. My problem is that at some point the market just breaks, and I don't want to be anywhere close to that. We've had a little bit of a rally, but 100 or 200 points is not going to be, I think, enough if we don't get away from that before the end of the day. I'd rather buy Monday than try to go back into the end of the day today and find that you go lock limit down and there's no way to get out. What else? Okay. Yeah, I think we're close. The real problem is that by now I was going to expect. Okay, do you think today's low in the SMHs will hold? SMH. You've got a nice little pop out here. We have on the line somebody. You got a nice reversal in the SMHs, but you don't have a lot of volume. My guess is that you're going to get that retested. And maybe that is what we've got next. Anyway, we're going to go to Dave in Texas. How you doing today, Dave?
Hey, hi. How you doing, Dave? Good to talk to you again. I talked to you about a year ago. So I want to ask you a question. All this pontificating going on CNBC with Larry Kudlow, and after Larry Kudlow, they were talking about the Fed should come in maybe over the weekend and do an emergency rate cut. I'm just curious, Dave. What difference does a rate cut have to do with making the stock market lose the fear of this coronavirus?
It doesn't do that. It does help after the fear has left. So let's say, if you're not flying somewhere today because you're afraid of the coronavirus, or the coronavirus has come and mugged you and taken your money while you were getting out of the ATM, or all the other reasons that people are saying that this is going to happen. It's not for that. It is going forward. If interest rates are lower, it should be easier to get the economy going again. And waiting to drop the interest rates is problematic. The Fed and Treasury both have a history of being very late to the party, or waiting until something really fails to act. We've got a 100% chance of a 0.25% rate and a 70% chance of a 0.5% rate in the March things. They should have just done it now. Just should have said, okay, we're doing it now. And that lets a little bit of the pressure off in the markets, because if they break the markets and we start getting flash crashes everywhere, the damage repair on that is going to take a very long time. So the answer is, it doesn't do anything for the virus. It does do something to activate the speed of capital after everybody decides that this is not going to be the 11 that they believe it is, but it's going to be more like a 3.
Okay, so
now I'll take you back to a time when this has happened before. And it wasn't a virus. It was a company called Long-Term Capital Management. They were busy trying to blow up the world economy by having 100-to-1 margin on everything they had. In October 18th of 1998, the market was ready to literally be the equivalent of being 4,000 points down in a single day on the Dow today. And the markets were breaking, and Rubin and who was it? Gold. I'll think of it. Hang on, we'll be back in a minute.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, Dave's still on the line there. I was going to say, I couldn't remember who it was, but it was Greenspan and Rubin that came out, and I want to say it's October 18th because I just started full-time trading, and it was kind of think about starting trading. Oh, let's say last Friday was your first day of full trading, and you saw this for your first week, so you would probably have gone fairly nuts fairly quickly. I'd been trading for 3 years before it, but that was kind of interesting. But yeah, there is a long history of the Fed getting into the middle of these things and slowing them down. I was talking to Basil earlier today, and he said, I was saying, well, if these guys come out now, then really they were able to keep the rally going all the way into 2000 from that part, where the market would have blown up in October of 98. You're kind of cutting out.
Can you hear me better now? How about now?
Yeah.
So I was wondering if you could give me any kind of flash crash idea for DIA, the diamond. Is this thing possible? 230, 225, 220? I mean, this is just incredible how the fear is putting this market into this crash vibe kind of feelings.
Well, possible, anything's possible. Probable, I don't see that you can tell that until it's probably exhibited itself. So, I mean, my big problem here, we've had a nice little bounce here, 20 points in the S&P cash, is still what happens if we get into some level. And the reason that I'm worried about this now is we really need to be something above like 3,000. So that maybe some of these hedge funds and those things that are blowing up or going to blow up get handled. But we'll see. Maybe the market does turn around and just got me to toss in my longs at the wrong time. But it's rare that you get a horrible week and then get people really running. If it's going to start, it generally starts earlier in the day on Friday. So we shall see. But at this point, I'm looking for lows to buy, not places to short.
Yeah. Well, I mean, if people are going to be fearful going into the weekend, I'd say by 3 o'clock, 3:15, the market should start to sell off again because people don't want to be whoever these millions of machines. I mean, whatever these machines are doing for day trading, quick in and outs, they're going to be getting out, wanting to be, I think, flush by the end of the night, 4 o'clock. And then
but like I said, I think this
weekend.
I think this all goes away. So I'd rather be buying the lows than trying to make some money on the downside now. Anyway, thanks for the call, Dave. We're going to go on to that's it. We're going to go on to more questions in the Dow. Let's bring forward, of course, time change. Okay. We kind of answered that. Can you touch market expect for March 20th calls? I'll send you those over the weekend because it's much more interesting about what will happen today at the close than what's happened today. But I mean, again, I would much rather have seen this market at 3,000 now confirming some kind of low. We've had some bounces. They just haven't really been able to stick the way that you would like them to. Okay, let's go back. I was going to say we were looking at these Gartley patterns, and they're kind of breaking out to what was the other ones I wanted to look at here? Synovus Energy, CVE. A lot of these things were out there, but a lot of energy on that last C to D leg, but we had a lot of them, and I was wondering whether or not these things would kind of come out today, but don't see a lot of confirmation in the rest of the market. Just some things to look at. Let's go back and look at some of the big stocks. Microsoft, of course, was kind of pushing up from the lows. It went to 152, and it's about 160 now. But again, that may be, one stock in the rest of the market. Apple continue to be problematic, although it is up off the lows. It's nowhere near the highs. Let's take a look at Amazon. Okay. Well, you got certainly high volume. Got 6 million shares today, going back into 3.5 million shares. And this is where we were hoping today to get some light volume and a pop. The energy wasn't all that exciting on the way down on Amazon, so it may be able to stay here. But you still kind of have some high volume. So maybe you get a little bounce and you come back and test on a lighter volume. That may be a better place to buy. And see what else do we have out here. In one of the ones I was looking at is this XME. But again, you would have liked to seen a lot more in the way of a retracement today. It's trading out at about 22.01. But this may be the most washed out sector in all of the stock market now. What else do we have? Let's see. Question about the TLT. Yeah, it's not quite a three-gap play. My thoughts were more on the lines of today getting a retracement and having a three-gap play in the S&Ps. And generally what you get is you get that gap this morning and you get the instant fill of it, which is what I'm looking for. And again, I'm not going to be selling anything short here. And again, yes, the SPY, a beautiful example of a three-gap play. Your first one comes down on the 24th of February. The second one on the 27th. Today, you get the third gap out here. That generally means you're going to, at worst, go sideways and more than likely eventually fill all three of those gaps. So that's what I've got in my mind over time. The only downside I have is, like I said, being long going into this weekend. And, I'd rather just take the cash off and come back and try to buy on Monday. Anyway, we're off 73 on the S&P cash. Dow's down 681, and Nasdaq's off 128. 129. Crude oil, question on that. I was looking at a chart of the OIH. All of these are massively washed out. And you got a little bit of a reversal out here in the market oil services. And, of course, let's go to this so I can actually take a look at it. Where's it at? Oh, we're going to break again. Okay, we'll be back in a minute, but I wanted to look at oil. Okay, we're off 233. You're at the price of production for overall in the world, which is an average of about $45. So you're right at the cost of production. Maybe you can get down to $40. That would be a stretch. We'll be back in a minute.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Well, we had a little bit of a bounce on a fairly nebulous statement from Powell about we will support the market, and ended up cutting off about 200 on the Dow. But we'll see whether or not nebulous statements are enough to get this off. We're pretty close. Like I said, I just hate waiting for the last minute on Friday to get the market to bounce. But it may. And I may just rebuy on Monday. You never know. But you got to be very scared about these markets right at the lows. Okay, what else do we have? We're looking at some of the other ones. NFLX. Yeah, you got a pretty nice candle on this one. On the 25th, you had 6.5 million shares. Today, you got more volume. So you're probably going to get this retested. It'd be nice to get a little bit of a bounce and retest this on Monday in the morning and then see the market start turning. But it's kind of tough to see now. GNR, what is this? Oh, index shares. Oh, got a question about what else we have. Major oils. Everything's all capital in this, which makes me think that the guy does not know that all capitals are yelling. How about Exxon, Chevron, Total, and BP? All have great dividends. I'm building a position for the very long term. I bought Exxon $20 at a dividend at 10% when they had that little oil spill in Alaska. Enjoy the program. Keep up. Keep it up. I'm building a position a little at a time. Monday will be the day. I'm thinking, if you don't see any kind of failure here into the end of the day, the problem I have is any kind of lower price right now that doesn't turn around could get a fairly quick liquidation into some of these hedge funds. And that is the problem that I'm looking at. Now, Dow's now down up 500. So let's go back and look at saying, yep. Okay. Yeah. Okay. Mr. Pop laughing out loud. Okay. Well, I guess the market is taking Powell's promise to support as at least tepid example of looking at what's going on. Okay, what else do we have? WDC. Take a look at that one real quick. Okay, you're filling this gap up that had 9 million shares with 5 million shares. So, yeah, pretty good support on Western Digital at this level. Let's go back and look at the SMHs here. These things are really heavily shorted. So, yeah, you're starting to get the kind of candle that you need on the SMHs, down to 124.31 today. Finally, it broke. We were waiting for Restoration Hardware to break. I did not get the timing right. But did fall apart. It's back down to 180. Question on Micron. This one seems to be one of the weaker ones out here in the space, but the candle looks fairly good back into the support level at about $52. So we'll have that. Question on buying Boeing here. It's broken the support areas. So, I mean, it's up $3 or $4 from the low, but I don't see any signal on this one that says buy now. Go back in there. Question about GDX and GDXJ. These things get killed. You got to think that there's something else going on. I just don't know what it is. But certainly you have massive amounts of volume to the downside on these. So certainly you get the washout of all times. Gold seems to be, though, the thing that you get when it looks literally like there's absolutely no tomorrow in it. A lot of times that's exactly the only time you can buy, and that is when there's extreme blood in the streets. So we'll look at that. Okay. Well, we're getting back up. Got another 20 points to go to prove that the market can't break here. So we may actually get the buying signal before the end of the day. We shall see. Okay, HLF, we looked at those. Okay, we looked at Microsoft. A question about looking at AMAT. Yeah, you just had a lot of these bounces off the lows. Unfortunately, there's a huge amount of volume on these things. You would have liked to get it the low in, and then the whole market kind of come back up. But 10 million shares in the previous low, that was on January 30th. You got a nice 9 million share low today. Okay. Question. We got a caller coming on. Take a look. Tim, how you doing today, Tim?
Good. How you doing, Dave?
Great. So what's your question?
Yesterday you were mentioning some of the a couple of stocks, like I think it was Apache, and I was looking at the XOP, which has been actually hanging in there today.
Well, I was talking about that earlier with crude at about $45. It's the cost of production, right? On the average cost. Right. It may be $20 in Saudi Arabia, but for the shale oil and everything else, it's maybe $50. So they turn off some of the more expensive versions of that, but $40, $45 somewhere in that range. So we're right on that. This sector's had probably the biggest washout between that and the metals market, the XME. So, I mean, if you're trying to buy low and sell high, this is not a bad time to be looking at these. The only question,
the XOP's been acting well today, actually, but it's actually up on the day.
Yeah, I was talking earlier to one of my subscribers, and I was saying, this is the day when you buy, and in 3 months or even a month, you'll feel like a genius, but you'll feel like hell all weekend long, or even all next week, right? It's something you really have to sit on your hands and hate yourself for a while before you can love yourself again when these things start moving back up. And of course, when this comes down like this, it may fool around for a while as it goes sideways. But, unless the market blows up, which frankly at the lows like this that won't bounce going into Friday, I'm always nervous about. But, Monday morning, I'd look at it hard. So
yeah, it's tough time right now. This is tough, but anyway, we'll been acting well
I'd
today,
I'd rather pay
that yesterday. So
yeah, I'd rather pay 50 cents more on Monday than buy it into the Friday, buy it into thing. But I mean, we keep bouncing around down here. Powell's starting to act like maybe he's actually going to do something. I thought we'd actually have the equivalent of Bloomberg, or not Bloomberg, but Greenspan and Rubin in 98. But, just there's a little half-hearted statement here. Doesn't mean a lot to me. You want to hang on?
Dave. Nope, I got to get rolling. Thanks a lot.
Okay, bye.
Bye.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back, and we're on the line with Mark in Seattle. How are you doing today, Mark?
Well, doing great. How are you?
Another day in paradise. So
hey, you were talking about oil and energy, so I'm just curious. Okay, when do you think, if this market continues to bounce a little bit today, is that going to be a good time to pull the trigger? And then we also talked about energy, so I'm thinking about ERX, if it is a good time.
Like I said earlier, I wish the market would either fail here or go higher. It's in this no man land. I really was looking for something over 2,900 on the S&P cash to say that that literally the worst was in. And maybe we get it, maybe we don't. So we'll have to see. But I would still wait either till Sunday night if you're playing the futures, or Monday morning to see whether these end. The only reason I'd be looking at this and a lot of the other stuff is that, like the commodities, is that these things are just so washed out. and you're at the price of production. So generally, now the problem is you can go at the price of production for a while, but generally you don't. Generally, people start shutting down wells and doing stuff because it's just not worth doing. But sometimes it takes a couple of weeks. But I think you're awful close in here. But again, it depends on what happens into the end of the week. My problem right now is not what the market looks like so much as with the hedge funds that could conceivably blow up here come Monday. We've seen a lot of selling. We haven't seen a lot, from what I could tell, a lot of forced selling. And that is my problem, that you either get that at the end of the day or maybe on Monday morning.
Gotcha.
Okay. We'll be back in a minute.
Larry